We see stocks are down for the day just a little bit. Bonds are up. Gold is down the most for the day. Now, I want to tell you about some new things we're putting out for you, some new trainings. And in fact, there's one in particular I want you to get. I think I'll put it in the show notes for all the subscribers. If you're not a subscriber, go to chartingwealth.com and sign up. You'll also get all the other great things we have there every day for you. Links to the daily market worksheet, weekly market worksheet, trade worksheet, all that stuff's free. This is an easy method that you can use every time you enter a practice trade to keep up with how well the trade is doing, or we don't want it that way, but how poorly, and whether or not you need to get out. But it's an easy tracking method is the name of the video, and I want you to get it. We record and do so much. I went through all of our prior trainings to think about other things to provide, and I found all this great material. So I'm going to be putting all that at the end of the videos, and I will put a link into the show notes. So if you look at the end of this video, if you're watching it via the emails that we send out, if you're a YouTube subscriber, you'll see a whole bunch of links there, depending if you're watching on your computer, may show up, should show up on your phone. Do follow the one on easy trading method. Also, link to purchase the book is in the show notes. You want to become a Patreon member? A lot of great stuff we shared with the Patreon members today on our live Q&A. We're also going to be, again, toward the end of the month, we will be reviewing the stocks and ETFs that the Patreon members are interested in. Follow the links in the show notes. You can find them also at the YouTube channel to the Patreon membership. You can find out all about that. We really appreciate that help and support to defray some of the costs for bringing this to you on a daily basis. Now, let's jump into the S&P 500. We can see that we're going into our 5th week of up movement. We're going to our 3rd week after the weekly vertical crossover, that magical thing that occurs occasionally. Hadn't really been happening all that much lately, but it did happen back on the week ending the 25th of January, going into the 3rd week. In fact, the biggest candle yet so far, derivative oscillator gaining upward momentum, price percent oscillator spiking up. We look at excuse me, just trying to get over a cold here. We look at the 2-day chart, continuing to move up. Derivative oscillator losing a little bit of upward momentum, but that price percent oscillator still moving up quite nicely. And then where we see some weakness, but this appears common. It's happened a few times over the last few weeks as things have moved up after anywhere between about, 4 and 5 candles up. 3 at one point. We see things then sort of level off as the market digests gains. Now, is it simply digesting a gain, or is it getting ready to roll over going down? Well, price percent oscillator is heading down on that 4-hour chart. Derivative oscillator is losing upward momentum. So be very careful, pay close attention if you are in this practice trade as to what happens in the morning. And of course, if you have a crossover going down, it's a very good sign that you might want to take your profit, pull that trade, and wait for a rotation back over going up if that occurs. But just watch, see, use all the charts all the time to help you make your decisions. Don't forget, 2-day chart, weekly chart still in strong up moves. The trend is your friend. And as I was telling the Patreon members today, don't forget the last portion of that. Trend is your friend until the end. And you don't want to be there at the end hoping the trend continues, because it always starts, it always changes on the 4-hour chart first. Just like everything, all the changes start on the little chart and then work their way into the big charts. But right now, the big charts are strong, so we'll hope that this up move continues. But again, we're not going to hold out hope when the indicators tell us otherwise. But we'll just forewarned is forearmed. Okay, let's go into the Qs. Qs also, nice big up candle so far as we get into this week. We won't call this candle, of course, until it closes out on Friday. But looking nice so far. Derivative oscillator gaining upward momentum. Price percent oscillator spiking up quite nicely going into the 3rd week, well, 2nd week, 2nd full week after the weekly vertical crossover occurred. 5 weeks altogether of up movement. Go to the 2-day chart, we see the derivative oscillator gaining momentum, which is nice. A nice big up candle forming, and of course, This is a completed candle now, so nice big up candle. We did have, again, the Qs down for the day. S&P 500 down 0.10%, so that's just barely. Qs down 0.30, 0.3%. What we see there is, again, we see the sideways slide that we've seen before. In fact, we've seen 2 full days of down movement. We've also seen sideways slides happen for a day, and then resumption continues. So watch and see. Let's see what's really going on. We had a red spinning top, meaning indecision tending down, and then a doji, lots of indecision at the end of the day. Derivative oscillator continuing to lose momentum since it spiked, since it peaked. Looks like it peaked back on the morning of Tuesday the 5th. And then we see the derivative oscillator losing momentum. And again, that price percent oscillator is heading down, hasn't crossed, so just watch, see what you see in the morning. It's where we are on the Qs. Hopefully, you jumped into one of those 2 trades. Don't advise you to do practice trading of more than one stock at a time. It is so hard to focus. You can try, and if you can do it, you're a better man or woman. Well, better man than me. You may be a better woman too. Let's keep going. What do we see going on TLT? We see that TLT is, again, in a sideways slide on that weekly chart. So far, lots of indecision, almost pretty much have a doji just pushing through that weekly trend line. Derivative oscillator losing upward momentum. Price percent oscillator barely heading up. And again, wouldn't you expect bonds trying to sort out which way to go as stocks have been gaining momentum? Bonds are typically a safe place to put your money. If stocks are doing poorly, stocks are doing well, bonds typically, money comes out of there and goes into the market. That's sort of the way things work. People ask me, why do you follow 2 stock indexes and then bonds and gold? And I tell everybody, when the markets crash, which they do at times, where's all the money going to flow to? Bonds and gold. Not all of it, but you'll see those things start rocketing up. So does it make sense to pay attention on a daily basis, even though these are hard to chart right now? I'll admit to you, bonds and gold, not super exciting to chart. All the good moves seem to be on the Qs, the NASDAQ 100 and the S&P 500. So why don't we chart them? Because in the bad times, when the money flows out of the stock market into bonds and gold, you want to be able to read these charts. You want to be poised to jump in and ride those things up big time in your practice trades. Again, we're not a stock calling service. We're an education firm, not giving market advice. We want you to train with us and everybody else. Read books, practice, do everything you can do to gain all the knowledge, because the one thing you'll find as an investor and a trader is it's going to be personalized to you, to your schedule, to how you think, to how you react, to the amount of stress you want to put up with. And over the years, I put up with less and less stress every day. I want my trades to be simple. I want them to be almost a guarantee, as best as I can make it. Nothing ever will be in the market. The market will always be surprising you. Charts that have worked for years will just stop working at some point. That's the way things are. But that's why you always want to be experimenting, looking at other ETFs, looking at other stocks to track, looking at other time frames. And I don't discourage you from looking at other indicators. Do whatever you need to do. Find out what works and do that. We'll try to help you as far as providing the stable of ETFs that we provide so that you got a broad range of commodity, bonds, stocks. You get a good range of what's going on. So sideways slide going on the weekly chart on TLT. And what do we see going on the 2-day chart? Well, a green spinning top at this point, which means indecision tending up, derivative oscillator losing downward momentum, price percent oscillator almost flat. Again, don't have a trade here because the 2-day chart's in a confirmed down move, weekly chart's in a confirmed up move, and all that just means mess. It's just sliding sideways right now. You don't have a trade here. So we just continue to monitor, see what we see when we see it. 4-hour chart looked like it was trying to cross over, big up move in the morning and then a pullback in the afternoon. Again, ended the day up 0.05%. So we'll continue to watch and see what we see with bonds. So let's leave bonds. And lastly, as always, We go to gold on our weekly chart. Gold is showing a weak week. What we basically see looking at the weekly candles, a sideways slide with the wick not even getting anywhere near as high as the wick did the week before. Wick. Okay, I'll stop. The derivative oscillator is losing upward momentum. Price percent oscillator is going flatter, not flat yet. We go to the 2-day chart. What do we see there? Well, the 2-day chart is losing lots of momentum. You can see that flat sideways slide over 6 days now, sliding over the first 4 days and really heading down over this last day. That doji sort of tells you what's going on. Lots of indecision, tending down. Price is now pushed through the 2-day trend line. Looks like the price percent oscillator is getting close to crossing over, going down. The derivative oscillator losing upward momentum. And then lastly, we go to the 4-hour chart, and you can see down in the morning, pushing through the 2-day trend line in the afternoon, still above the weekly. Now, gold is still poised until there's a crossover on the 2-day chart taking it away from you. If for some reason gold turned around and shot up, crossing over on that weekly chart in the morning, might have a jumping in point in the afternoon or a practice trade. So keep that in mind. Not really likely to happen, but hey, we are not prognosticators and forecasters. We are trend followers. What the charts tell us to do, we do until they don't work anymore. How do you know they don't work? Because things don't work out in them. However, we have found with the methods that we are using time and time and time again, as those you've been with us for a while, the reason you're with us is because you see what we do work over and over and over again. So keep practicing, keep the faith, work hard. I do want you to listen to that and look in your show notes. If you're not a subscriber, subscribe. And we will get you out. I'll put it in the next 2 days. I'll put out the easy method for tracking your practice trades. The software that we use for free, TC2000 is the paid version, but Free Stock Charts is the free version. It allows you to track your entry points and see what kind of profit you're making and how well you're doing. So anyway, that's where we are, folks, as we end the day. Again, appreciate you being with us. God bless. All the best from the whole team here at Charting Wealth World Headquarters. If you haven't bought the book, buy it. We're in our 8th printing. We've sold, I don't even know how many copies, but you won't regret it. It tells you everything that we do. It's in spiral bound, so it's easy to read and hold open while you're working. And, of course, be a Patreon supporter. That's where all the special goodies come. God bless, my friends. Again, all the best.